The major indices are relatively flat today, but there's one stock that's doing really, really well, up 13.5% on the day because of a new analyst rating from Morgan Stanley, and that's what we're going to talk about in this video, so stick around. Hey guys, welcome back to the TipRanks YouTube channel. I'm Richard Allen. Thank you so much for joining me for another video. We're going to talk about SoFi today because SoFi has a brand new analyst rating from Morgan Stanley and they're up 13.5% because of it. So this is big news because Morgan Stanley is giving SoFi a $25 price target and people are really excited about. So we're going to go over that in this video. We're going to talk about what SoFi does as well. So I'm going to give you a little bit of insight into SoFi. SoFi was actually a SPAC last year. It was one of the Chamath Palihapitiya SPACs along with Open Door, Virgin Galactic, and others. So he was instrumental in bringing SoFi public. And this is a big tech company in the fintech space that does a lot of stuff. They do a lot of student loans. They do banking. You can trade stocks on their platform as well. So they're really doing a lot of great stuff in this market. And it is doing extremely well today, up 13.5% on the day. If you take a peek at the stock here, it's a strong buy based on 6 analyst ratings with an average upside of 37%. Also, if you guys aren't aware, check out the TipRanks platform on the main page. If you scroll down, usually at the beginning of the month, you can see the most traded stocks by TipRanks investors every month. And in September, SoFi was in the top 10 and it was also in the top 10 last month as well. So this is one of the most popular stocks, the most traded stocks out there. Through some research that I've done, this is the #1 stock right now on Wall Street Bets, the most mentioned stock out there. This stock is getting a lot of praise and press right now. But let's take a peek at what Morgan Stanley's analyst Betsy Gracick has to say about SoFi. Again, she gave the stock a $25 price target, which is higher than the average Wall Street price target. Gracick says, "I'm initiating on SoFi. This is a powerful revenue growth story as it ramps shares of the consumer financial services wallet." She continued, "Competition is rising among challenger fintechs for Gen Y and Z, but SoFi has a leg up given its roots in the hardest part of consumer finance, lending, along with a robust digital offering. SoFi's technology allows customers to have an all-in-one app experience and website to trade, invest, apply for loans, and more." Again, the stock is up 13.5% in normal trading today. If you take a peek at the charts here, this has broken through a few resistance levels over the past 1 year. So this is really good news for SoFi right now. I think as long as the major indices do well and we don't see a big crash or correction, I think SoFi will respect the technical charts and go back towards $20, $22 per share relatively soon. That's my prediction on SoFi. Again, SoFi is an amazing platform. You can do a lot of really cool stuff on this platform. Apply for loans, trade stocks, manage all your banking needs. It's a really cool platform and digital wallet that they have. And I'm really excited for SoFi going forward. This stock has had quite the 52-week range from $10 as a SPAC, obviously, all the way up to almost $25 per share. So it's been all over the board. This has a $14.5 billion market cap right now. So this is a big stock. It had a big valuation when it came out of the gates at $10 per share. It was valued at almost $9 billion. So this is one of the larger SPACs last year. And it's doing well. It's doing well for a lot of people. So it has a 54.68% upside over the past year. So that's good if you got in early and held on for SoFi. Guys, thank you so much for joining me for this video. As always, if you learned something new or found any value in this video at all, let us know by hitting that like button and that subscribe button down below. And as always, I'll see you in the next one.